Inflation, a term often tossed around in economic discussions, but what does it really mean? Imagine this. You're at the supermarket and the price of your favorite cereal is higher than it was last month. That's inflation at work. It's the rate at which the general level of prices for goods and services is rising, causing the purchasing power of your money to fall. It plays a pivotal role in the economy, influencing everything from your personal finances to the nation's fiscal strategies. Inflation, therefore, is a key indicator of economic health. Inflation doesn't just occur out of the blue, it is caused by a variety of factors. One key cause is demand pull inflation, where the demand for goods and services outpaces supply, resulting in price increases. Another cause is cost push inflation, where the cost to produce goods or services rises, causing businesses to increase prices to maintain their profit margins. Now let's explore the types of inflation. First, we have creeping inflation, which is a slow, steady rise in prices. Next is walking inflation, a more noticeable but still manageable increase. Galloping inflation sees prices skyrocketing at an alarming rate. Lastly, we have hyperinflation, where prices soar out of control, often leading to economic collapse. Each type of inflation presents its own challenges and implications. Creeping and walking inflation can stimulate economic growth, while galloping and hyperinflation can cause economic instability. Understanding these causes and types of inflation is vital to grasp its role in the economy. Inflation, though seemingly abstract, has tangible effects on the economy. Let's break it down. Firstly, inflation can influence economic growth. When prices rise at a moderate rate, businesses can potentially enjoy higher profits, leading to more investments and job creation. This can boost economic growth. However, too high inflation can stifle growth, as uncertainty about future inflation may make companies hold back on investments. Secondly, inflation affects your purchasing power. Imagine you have $100 today. If inflation rises, the same $100 will buy you less tomorrow. That's because as prices increase, each unit of currency loses some of its purchasing power. Lastly, let's touch on the Phillips curve, a concept that shows a trade-off between inflation and unemployment. It suggests that lower unemployment often comes with higher inflation and vice versa. Inflation, therefore, is much more than just numbers on a chart. It impacts every aspect of economic life. Managing inflation is a key responsibility of central banks. These financial titans use monetary policy strategies to keep inflation in check. They adjust interest rates, influencing the cost of borrowing and consumer spending. They control money supply, impacting how much money is in circulation. Sometimes they employ quantitative easing, buying assets to inject money into the economy. It's a delicate balancing act, like juggling fire. Get it wrong, and the economy can spiral. Get it right, and the economy thrives. Effective inflation management is crucial for economic stability. Inflation, like many economic phenomena, is a double-edged sword. On one hand, moderate inflation can stimulate economic growth, providing a gentle nudge to consumers to spend now rather than later, thereby driving demand. On the flip side, however, there lurks the menace of hyperinflation. When inflation spirals out of control, it can wreak havoc on an economy, eroding purchasing power and leading to financial instability. Therefore, a balance must be struck in managing inflation. Let's examine the real-world implications of inflation. Consider the hyperinflation of Zimbabwe in the early 2000s or Japan's struggle with deflation in the 90s. These cases highlight the importance of effective inflation management. Inflation, as we've seen, plays a pivotal role in the economy. It's a complex phenomenon influencing economic growth, purchasing power, and unemployment. As we move forward, the ability to manage inflation will continue to shape our economic landscape. Understanding inflation is key to understanding the economic world around us. If you enjoyed this video, please subscribe and share it. I'll see you on the next video.